How your taxes may change after 2025. As 2025 approaches, we anticipate substantial tax reforms and policy changes that will impact people, companies, and the economy as a whole. International financial agreements, domestic fiscal deficit reduction measures, and economic reforms are the causes of these shifts. This video explores how these tax changes can impact various industries, giving you thorough, understandable guidance. Number 8. Tax reforms for personal income. How will Pakistan's discussion about income disparity change as a result of the impending tax reforms? One of the biggest tax reforms is the personal income tax rate change. Government tax rates have been modified to make them more progressive and ensure that high earners pay their fair share of the nation's revenue. You should know associations and non-salaried persons are covered. The big adjustment raises the top tax rate from 35% to 45% to gather more money from high-income people. Concerning salaried people, even while the top tax rate is at 35%, incremental rates in various income bands will increase taxes for most salaried people. Middle-income individuals may pay 2% to 3% more in taxes. Higher-income persons may pay more taxes depending on their tax categories. These changes are part of the government's efforts to stabilize the economy and reduce economic inequality. Number 7. Advanced tax on transactions. Involving immovable property. The government has implemented stricter regulations in the real estate industry to deter speculative investments and increase paperwork. The updated advanced tax rates that apply to real estate transactions reflect this. Regarding the acquisition of real estate for filers. For properties valued up to 50 million Pakistani rupees, the tax rate is 3%. PKR 50 million to PKR 100 million properties are subject to a 3.5% tax. The tax rate increases to 4% for homes valued over 100 million Pakistani rupees. For those who are not filers, 12% for homes up to 50 million Pakistani rupees. Properties valued between 50 million Pakistani rupees and 100 million Pakistani rupees are eligible for 16%. 20% for homes valued at more than 100 million Pakistani rupees. Regarding the sale or transfer of real estate, rates for filers range from 3% to 4%, depending on the value of the property, whereas rates for non-filers are much higher. Since the real estate industry has traditionally had poor tax compliance, the government hopes to increase openness and compliance by implementing these policies. Number 6. Adjustments to corporate taxes. How will the 44% bank tax affect lending rates and the growth of the private sector? In order to comply with international obligations and boost government income, the business tax environment is likewise experiencing major changes. The banking industry. The government has raised the bank tax rate to 44%. A higher income tax rate for banks took the place of the government's original proposal to impose an additional lending to deposit ratio (ADR) tax in order to promote lending to the private sector. We anticipate that this action will generate an additional 60 billion Pakistani rupees. Exporters. A new plan proposes to increase the advance tax on export revenue by 1%. Extending the tax base and guaranteeing fair payments from all sectors are the goals of this program. Other corporate entities. There are now discussions on possible changes to corporate tax rates for non-financial organizations, which might indicate more extensive changes to the company tax system. Number 5. Tax reforms for agricultural income. We are now examining the income from agriculture, which has traditionally had lower tax rates. To bring it into line with other industries, the maximum effective tax rate on agricultural revenue may rise from 15% to 45%. This reform is a component of the government's plan to solve revenue shortages and guarantee equity across all economic sectors. Supporters contend that this would reduce tax fraud in the agriculture industry and advance fairness, while detractors claim it may burden small-scale farmers. Number 4. Changes to the provincial sales tax. What effects would the higher sales tax in Sindh have on local consumers and businesses? To boost compliance and revenue collection, provincial governments are also updating their sales tax laws. Among the major adjustments are Sindh Sales Tax (SST). The regular tax rate is now 15% instead of 13%. This change creates consistency across Pakistan by bringing Sindh's prices into line with those of other provinces. E-invoicing compliance. Failure to comply with e-invoicing regulations may now result in fines of up to 1 million Pakistani rupees. This policy is a component of the government's larger initiatives to increase openness and digitize tax collection. The goal of these revisions is to encourage voluntary compliance and modernize the tax system. Number 3. The impact of global financial agreements. International agreements have a big impact on Pakistan's tax changes, especially those with organizations like the World Bank and the International Monetary Fund (IMF). IMF Agreement. In 2024, the IMF granted Pakistan a $7 billion 37-month loan. In order to stabilize its economy, the nation agreed to raise taxes on agricultural revenue and carry out structural changes. World Bank promotes. In order to improve revenue collection, promote tax changes, and address fiscal issues, the World Bank authorized a $20 billion 10-year credit package. In order to attain economic stability, these international agreements emphasize how crucial it is to develop sustainable tax policies. Number 2. The wider effects of tax reforms. How will these reforms affect your personal finances or company operations? A more comprehensive strategy for economic stability includes the expected tax adjustments. Their implications for various stakeholders are as follows. For individuals, for high individuals, and middle-income earners may be subject to higher tax obligations, especially if they work for a living or buy or sell real estate. Making appropriate financial plans is essential for everyone. For businesses, organizations will have to adjust to stronger compliance standards and higher tax rates, particularly in the banking and export industries. Although it could have an effect on profitability, this might also encourage improved money management. For the economy, these measures seek to stimulate economic development and lower the budget deficit by expanding the tax base and improving compliance. However, successful execution and public support are necessary for their success. Number 1. Challenges and future outlook. Although the suggested tax changes might help stabilize Pakistan's economy, there are drawbacks as well. Public opposition. Both people and corporations may object to higher tax rates. Overcoming opposition will need open communication and equitable execution. Administrative capacity. We must strengthen the tax administration to ensure efficient enforcement and reduce tax evasion. Economic impact. To prevent unforeseen repercussions like decreased investment or slower economic development, policymakers must closely monitor the effects of these policies. In conclusion, by 2025, we predict significant changes to Pakistan's tax structure due to justice, economic stability, and budget deficit reduction. These measures, from corporate tax reforms and personal income tax revisions to real estate paperwork improvements, take a comprehensive approach to fiscal challenges. Businesses and individuals must be proactive and aware in order to navigate these changes. Don't forget to like, share, and subscribe for more amazing content.